Hello and namaste and welcome back to my channel. This is Neeraj here once again and welcome back to my channel Financial Market Analysis Twist by Neeraj Shah. So in today's video I would like to discuss something regarding the implications of the imminent revival or the chances of revival of US-Iran nuclear deal and its impact on the crude oil market and in the generally that as you know that in recent times there has been a huge expectations that USA will revive that scrapped nuclear deal with Iran along with the support of the European nations so that if that happens then immediately you can see 1 to 1.2 million barrels per day of oil production will increase coming to the market as the sanctions may be lifted on Iran, and that may cool down the oil prices and fuel, energy and generally freight cost and mostly the inflationary pressure which is wreaking havoc all over the world and particularly in Europe and USA. So there has been a desperation on part of the USA to revive this deal, particularly from this Biden administration. So Iran also knows that USA is desperate, and that's why it is also playing its own game by squeezing the maximum concessions out of this whatever the nuclear deal revival, because as per the understanding that Iran should not have enriched uranium above certain threshold level of 5% or so, but if intelligence or whatever the sources are to be believed, then it has already breached that enrichment level, and that is where that the deal is still stuck, and I think that is where that there can be still a difficulty, much more difficulty than what the market is expecting. But at the same time, if the desperation of USA, particularly the Biden administration, shows, they may be willing to go to any length or any concessions to get this additional oil into the market so as to cool down the oil prices, and I think that is desperation Iran knows. But there is a catch in this also, that even if that USA and allies agree, but there may be a problem with the Israel, because already in last 2 weeks that fight between Israel and Palestinian has intensified to a great extent, and if this happens then I think that even if first of all Israel may not agree, there may be great pressure by Israel on USA not to agree to any of these things, but still if Israel is forced to agree, then we may see some repercussions of this deal on that conflict between Israel, Palestine, or Israel and Iran, and there may be a third front, what you call war front, can open up. Currently that war front is there between Ukraine and Russia, and already China and Taiwan is also a kind of a second front already is kind of activated, and it will be highly dangerous to activate this third front, which may plunge the whole world into a very unknown and kind of a consequences, unpredictable consequences for the world. But that is the reason I think that even if it is that deal is signed or whatever, it may take a very long time also, because it may not happen that deal is signed and immediately this thing is immediately it will be immediately it will be revived and the sanctions will be lifted, because there will be a whole huge process of that verification of enrichment of what extent by IAEA will happen, and then only. But still believing that deal may happen, but I think that that impact on the oil market, particularly Brent crude, will be to the extent of it will not be a permanent, or it will be just for a day or two, or for that particular when that deal is announced. So it will be a temporary for a short term impact, and if that, then it may come down to say $90 or $86. But my firm belief is that with all this situation for this year, I continue to believe that bottom for Brent crude is $95, as I have been maintaining since last 6-8 months. It has been maintaining that level, and the top level is $120 per barrel. So this is the range between which you can see that oil will be. And in a way, it is also good because for Russia also. So even if the deal is signed and oil cools down for some time, if that may weaken the ruble, that is what the expectation by the government also and the general people in Russia also is there, because at 50-55 ruble per dollar is not beneficial for Russia at all. Russia is export economy and most of the people also. So that is where, if it goes about 60-65, I would be the one who would be selling dollar. And if it comes back to say 50-55, I would be the one who will be buying dollar at that time. So I think it is a good, even if it declines, if oil declines and ruble weakens, that will be very good. But as I believe it's a very complex process, and the three war fronts can at a time get activated in the world and can be very dangerous, and then nobody can predict anything about what economy and what recession and or what will be the not only oil but overall economic situation and overall trade investment situation in the world. So that is one of the reasons I am being skeptic about the revival of deal. Even though it will be revived, but the impact may not be so huge on the oil prices as has been believed by the market, or as expected by the most of the fund managers, or the market expectations, or what do you call, say, that the Biden administration, because it may be a short term temporary decline in the oil if it happens, but it will come back because of so many other factors. Saudi and OPEC will take some other decision of tightening. Israel may react in a very not a very peaceful way. There can be a war, unexpected war can happen. So these are all weighing on the market. That is the reason I believe that oil will continue to, Brent crude has a bottom, as I can see from the chart, because chart tells a lot of story, that Brent crude can a bottom of $95 per barrel, which it will hold, and top is $120 per barrel. So, and even if with this some kind of a signing and all these things, it may come down to say $86 per barrel, because it may come down to 90, and if it breaches 86 is the best support for oil, Brent crude. It may not go down below $86 per barrel. So this is just I wanted to share my opinion with you, that it may be a short term, but it will hold at $95 per barrel. So that's all from my side, and till next week we come out with some other interesting idea. Till then, ciao from Neeraj from Moscow, and love you all. See you next week.